pension regulation across the region remains uneven. Kenya and Rwanda are widely seen as ahead, backed by strong accountability and regulators that can act more decisively. In Uganda, overlapping laws and lengthy legal processes often slow enforcement, making regulatory action less direct than in some neighboring countries.
Kenya and Rwanda are slightly ahead because there's more stringency when it comes to accountability for decisions, transparency, as well as powers of the regulator to enforce supervisory actions. A case in point is, for instance, in Kenya, the Retirement Benefits Regulatory Authority of Kenya can implement enforcement actions from a decision of the CEO of the authority. In Uganda, you may have to go through a process of proving that there is a breach. You may have to go through litigation. So it's a bit complex.
On oversight, Kenya stands out as the toughest. Its legal framework places direct liability on trustees and boards, enabling regulators to move quickly and penalize mismanagement. By contrast, Uganda's multiple laws and layered decision-making structures slow action, while Rwanda also benefits from more centralized and effective oversight.
Now, why is it that the Kenyan regulator and the legal framework is stronger? It's because their law gives sufficient powers to take action and to penalize those who do not comply with the law, or those who are seen to be acting not in the interest of members. Now, when it comes to sanctioning and penalties, again, the same process of proving who is liable. In short, the scope of liability of those who run schemes in Kenya is high compared to Uganda. Even the scope of liability of those who run schemes in Rwanda is higher.
To address these gaps, Uganda's regulator has adopted a risk-based supervision approach. Over the past 3 years, UBRA says it has become more proactive, identifying risks earlier and responding faster, particularly in voluntary pension schemes, to strengthen protection of members' savings, even as legal limits persist in schemes governed by their own acts.
The idea is that we attempt to identify, examine, and respond to risks. The new approach allows us to be more proactive, and with the voluntary schemes that don't have an act of their own, UBRA is more forceful in ensuring that members' money is protected.
As East Africa pushes to strengthen pension systems, the key question remains how quickly regulators can act when workers' savings are at risk, because retirement security is only as strong as the oversight that protects it. Betty Ndagire, NTV Business.